Welcome back to this lesson. In this lesson, we'll be learning on market structure break, which will be used further in the next video or in the next topic to be able to understand further concepts. So, a market structure break is a break in structure. So, by that I mean, for example, the market has been moving down, has been bearish, but then we have to have the skill to be able to identify when market shifts to bullish. So, for example, in this example, I'll be showing different examples in which market breaks the structure. So, for example, in this example, we have a swing high, and you can see that in this swing high, the market, we have the market running higher to run above it runs above the swing high and closes above with the bodies above the swing high. So with that, we identify that as a market structure break or market structure shift. We identify that the structure has shifted to bullish. So I'll be showing both sides of the market, where the market runs both shifts direction, both bullish and bearish. In another example, it is here where we see that there was a swing low. As a trader, you have to identify these swing lows and swing highs, and you have to have that skill to be able to identify that. So we can see that here in this market we had a down close candle in an up move. So this down close candle in an up move, in a way, when you come to a lower time frame, you will come to identify this as a swing low. So once this swing low was run out, and the market, you can see that the bodies of this candle, which ran this swing low, it ran and closed below that low. So this also confirms a market structure shift or market structure break. Another example we can see is here. We can see that market was running lower. So market was bearish, but you can see it reached a point in which this swing high, this was the first swing high in this down move. So this swing high, the market price came and ran above it. We can see that this candle, price closed above the swing high of this candle. So when market did this we identified as a market structure shift. So let's look at different examples of also bullish examples. We can see the next one of a bullish example is here. So we can see that price was moving lower, and it created a swing low. So a low, a high, and a lower low. Then market came and ran higher and closed above this swing. That is a market structure shift. We can see that above this swing, market closed above it. Even the next candle, it went higher above this high. So that confirms our market structure shift or market structure break. Another example we can look at is here. This is a bearish example. So market has been moving down, and this was the current swing low in this bullish move. But you can see immediately market came explosively and ran below this swing low. So this swing low was supposed, in this up move, this swing low was supposed to push market further higher and higher. But you can see that immediately we reached this point, market came explosively and ran below this swing low. So when market did that and ran below this swing low, we can see a close below the swing low with bodies below the swing low of this candle. So that is also our market structure shift. I advise you to go back to your charts and outline examples of market structure shift or market structure break, because this idea will be used in the next lesson. So I advise you to go back and do different examples so that you may be able to build that skill, and you may be able to have that sight to be able to see this concept of a market structure break. Thank you for listening.